Oh, welcome everyone. We're going to have a wee look at Sainsburys today. Now, it is a massive UK supermarket that has went a little bit under the radar for my UK dividend portfolio, but I'll explain later in the video why that could possibly be and whether or not it might actually be joining the portfolio. But in this case, we want to just look at Sainsburys itself. So let's have a wee look here. On the most important page for anyone to have a look is simply Google Sainsbury's stock and it'll bring you up this page here. And to be honest, it provides most of the information you would need. We have their ticker symbol, SRBY, traded on the London Stock Exchange, currently trading at £2.19, so about $2.50 for our friends across the water. As we can see in the last 5 years, we'll do Max firstly. Well, Max doesn't actually give me too much information. Last 5 years will do us rightly here. So let's see what happened in the pandemic. They had a bit of a dip. Okay, they went from £2.11 down to £1.79, going down again later in the year to 182 pence. They rose quite dramatically there, up to £3, and again they are on the decline. Now, here's the thing: they carry a very, very modest 5.96% dividend yield, which compared to other supermarkets is higher than the rest of them. I actually think it can give Tesco's a run for its money. How long? Tesco's stock is... Tesco's runs at 4%, so you're almost getting, a tasty wee 2% extra. Now, whether that is sustainable later on, it has actually been decreasing over the past 4 or 5 years for a multitude of reasons. However, at the moment it seems to have stabilised, and at least for the next 12 months they've announced that it's more or less going to be the same as last year. So again, nearly 6%. Might be a point for me to buy in for my own portfolio. It's definitely looking tasty, but we'll move on here. Have we look? So as I said, they are one of the largest chains. So they're up there with the likes of Asda and Tesco's itself, taking a 14.9% share of the supermarket sector. However, they differ slightly. Well, I'll say slightly. They differ in quite a large way to Tesco's and Asda in some of the things they provide. Let us go have a wee look here. So this is their website. Sainsbury's recently, it's not too long ago, acquired Argos. Argos, for anyone in the UK, you're very aware of that place. You went in, you had a look through the catalogue, you ordered it, you went up to the front desk and you waited if it was in stock. Everyone remembers those feelings of going into Argos. Well, Sainsbury's acquired them and Habitat. Habitat do the likes of in furniture and household items. Similarly to Argos in a sense that they're now in Sainsbury's. So anytime I order anything off Argos and I have to go pick it up, such as the green screen behind me, I went to Sainsbury's, walked through Sainsbury's, and I will admit, we unfortunately don't have one in our own town. I have a Tesco, so I normally shop at Tesco's, but anytime I do shop in Sainsbury's, it is a fantastic shopping experience. I love the layout. It's quite simple. It's obviously they are refined in supermarkets, being very good at all that. But we don't have one in our town, so maybe I'm a little biased that I do swap to Tesco's. However, Sainsbury's are actually coming out on top here as a very, very strong contender for a supermarket in any portfolio, especially a UK dividend one. Nectar points are their answer to club card points compared to Tesco's. And of course, with the picking up of Argos, you've got to go to Argos, and therefore you go through Sainsbury's. I ended up picking up a bottle of wine for my mum and a few other things on the way, because heck, I was there and it's the only supermarket that sells that particular bottle that I know my mother likes. She also loves shopping at Sainsbury's, so just like my recommendation, Barclays, I do like to use people's usage of it. And Sainsbury's is definitely up there in my mother's recommendations anyway. So let's continue on. I wanted to show you this map here. It's Sainsbury's versus Asda, so you can kind of get a good idea. They're spread out very similarly, but that's pretty obvious. They go into high density areas: London, Manchester, Liverpool, and as you can see in Northern Ireland, there is a dotting of both Asda and Sainsbury's. Although sadly, that wee dot there's Ballymena. That's the closest one to me. I live slightly south of it, so if there was a Sainsbury's in my hometown, would I use it more often? I would say so. A lot of their stuff is pretty good. So things to consider. If you ever invest into a business, it's good to know that you would use it and you like the service. If you hate the business and wouldn't use the service, why would you particularly have it in your own portfolio? Just questions I would ask myself. You never know. Moving on here to one of the most important tools in any investor's toolbox is, of course, the investor's relations. They obviously are trying to sell you because they want you to invest in their company. However, I had a look at their massive annual report, and I found a few interesting things. I'll obviously have this in a pinned comment for anyone that wants information on this, how to get the investor relations. Let's go over. Had it here. Building on our strong brand and strong assets. So some selling points to them. Sainsbury's brand and their own heritage. See, the brand, as I said, with my grandparents, my mother, they love Sainsbury's. So the brand, very, very strong brand. Scale, they are the second largest food retailer in the UK. They have a strong operating cash flow. And when it comes to paying dividends, I love to see a company with a strong operating cash flow. If you can generate cash flow, you can generate lots more dividends in the future. Attractive customer base, yeah, that's self-explanatory. Our stores, good catchment, strength and convenience. Our reputation for service, again, service. I think they're one of they're the highest rated for service among the supermarkets. Online skill and capability, I think they're getting more into that. And then obviously they have their own in-house Nectar, Club Cardy kind of system. I know Club Card is Tesco's, but you get what I mean. Yeah. And then obviously with the likes of Argos and Habitat being based in their stores, although I don't think we have any Habitats over here in Northern Ireland. It's another fantastic selling point for it, isn't it? Now, let's go over. You all know what's coming up next if you've been with the channel anytime. We have Dividend Max. Now, if you had 100 shares of Sainsbury's, you got a payment there of £9.90. Just to give anyone relatively new a rundown of this system here, we have obviously ticker symbol brings up all this information. It gives you when the dividend is expected to go X. Now, EX, you might be wondering what that means. That means the X dividend date, which is shown down here. That is the date that you must own the share in order to receive the dividend. If you sell the share after that day, you'll still get the dividend. If you sell the share the day before, or even on the day, which is a bit risky, you more than likely won't get the dividend paid into your account. So always bear that in mind if you're investing into a company, or more importantly, if you're divesting, you might want to wait until that date. Although it can fluctuate the general share price, so there's so many factors to look into that. Honestly, it's just a date. If you're excited, that is the date that the dividend will go X and you will be getting it. So, it's good to know that one. Declaration date, that's just the date that they announced they're going to do it, and usually the payment amount. And then the more important date for a lot of us is the pay date, although give it a couple of days before or after because of just banks and general delay. That normally applies more so to US dividends. You might need to wait an extra day. They pay 2 dividends per year, excluding specials. Although there is a special that is included that I think was just their final one. I'll show you what I mean here. So it says 6%. Obviously, I have here, it's like 5.91%. So close enough, in my opinion. They were a growing dividend. 2006, 7, 8, 9, 10. Obviously, 2011. A lot of companies didn't pay out a dividend in that date. And then again, it grew in 2012, 2013, 2014. And then, boom. We drop a wee bit more. You can see the percentages here. They stabilised in about 2018, went up again 2019. They plummet. Well, they didn't plummet in 2020. This is where Dividend Max, sometimes you have to check several websites. And even Dividend Max has this out in the blue. It says special. And it was paid 7p. So that meant, see, normally they pay in the interim, they'll pay the 3p. And then in the final, they'll pay 7 to 8p. So they did pay the 7p that year. So the dividend was correct. So I don't know why the drop of 70%, because there wasn't. The 7p was paid. So at the moment, if you do the maths, it's the dividend seems to have stabilised around 11 pence, which is about 5.5 to 6%. So again, might be worthwhile. Oh, there we go. They actually the declared amount was actually 10p. It went up. There we go. Next one is November. That's the next date that you would need to own shares. I actually might consider buying into them. Just from going through this, there's a lot of strong points to Sainsburys. And again, this is why I love doing these videos. Not only do I dive in them from you, I dive in them for myself, and I can have a good nosy at them. Of course, I am in Trading 212. This is stock brokerage that I use. And we're going to have a wee look here again. The last year, how have they been doing? Well, it looks like they're at a low, at least for the year. But that means that they also were up at almost £3. So they're down £1. Again, some people look at this, it could be a great buying opportunity. Some people look at this and go, you should be avoiding it. You got to read between the lines, have a look at so much, and then generally, even if you come to the best informed decision, still might not go the way. You know, it's a crazy world we live in. Plenty of things can happen. But we're going to have a wee nosy here. They are actually into financial services. So a bit like Tesco's, they offer like a banking side as well, as we've seen on their website, Sainsbury's Bank. And then, their brands also include, obviously, Argos, Habitat and Two's like a holiday booking company. Nectar and the bank, they offer tailored services across everything. So they have so much in-house. You know, you go to a Sainsbury's that has, you know, you have your Nectar for your points. Maybe you're with Sainsbury's Bank. Maybe you want to book a holiday, you know, Habitat for your indoor or your homeware stuff. And then Argos for, you know, basically anything. Argos has so much on their website. And then you have a supermarket on top of it. So that is brilliant. They have 1,400 stores, which include 600 supermarkets. And they have some convenience stores as well, employing 117,000 people. Let's see here. Their PE ratio, that's earnings per share, is 9.78. Now compare that to Tesco's, which is 11. They're slightly better than Tesco's. Although I think the revenue is a wee bit different between them and Tesco's. But they have a revenue of £30 billion and dividend yield 5.92%. Earnings per share is 20 pence per share. Yes, and let's see. Revenue, pretty normal. It's actually up in 2022. Also, their profit margin is up as well in this year. Pretty good. Assets to liabilities sits at around 68%. And operating cash flow. This is good. They have very, very strong, very strong cash flow. So that's always fantastic to see in any dividend paying stock. But yeah, that is J. Sainsbury, done and dusted. And I'm going to look a wee bit more into it for myself, maybe for the UK dividend portfolio. So stay tuned if anyone's looking at that series, and we'll see if Sainsbury's joins us in the end. But again, let me know what you think in the comments section below, lads. It's been fantastic doing this episode. Thank you for joining me, and hopefully I see you all in another episode or in another video. Bye bye.